Hey guys, Andrew Baxter here, and welcome to this week's Money and Investing podcast. This week you're in for an absolute treat. Something a little bit different. We've got a guest on, and not just any guest, one of the most notorious traders that you would see in global markets, particularly through the 1990s. It is one heck of a story you're about to hear, but more importantly, the nuances, the lessons that someone takes away from the experience that they've had. This guy grabbed headlines around the world for his actions. It's going to be a revelation when you hear what his single piece of advice is to anybody that's a would-be trader. Take plenty of notes, dial in. I know you're going to love this interview. Hey guys, welcome to this week's Money and Investing Show. This week we are in for an absolute treat. Just to give you a little bit of backstory on here, today we are going back to the mid-1990s and indeed the UK and Far East. We're going to explore some major experiences, learnings, breakthroughs, and ultimately the salvation of one man's journey through financial markets. From one of the most famous traders in the world, not necessarily for the right reasons, his unauthorized trades on the Cymex exchange in Singapore, culminating in the bankrupting of the UK's oldest bank, threatened the stability of London as the world's financial centre, and ultimately resulted in losses exceeding £1 billion. This is a big story. There are massive learning points in this and huge positive takeaways to take. It's not often that you have a guest whose reputation precedes him as much as my guest today, an author, subject of a fantastic movie, and arguably one of the most infamous traders of our generation, former Barings Bank floor trader and the original rogue trader, Mr. Nick Leeson. Welcome to the show, Nick.
Thank you very much for having me, Andrew. It's a pleasure to be here, to be honest. I kind of got a little bit nostalgic there with the introduction, and I think it probably made me sound a little bit better than I probably am. But we'll see where that goes, to be honest.
Well, it's interesting talking of nostalgia. I mean, let's take this right back to grassroots. And if we talk about the UK and specifically the City of London in the early 1990s, we're all basking in Margaret Thatcher's deregulation, the Big Bang, and so on that was going on in London. What was it that drew your attention to want to work in the city in the first place? You know, you're a working class lad. What was it that made you want to get into the city?
Look, I always had a huge desire for success, and like the city was never my first choice. When I was at school doing my A-levels, kind of law was the thing that I was probably gravitating a little bit more towards, and ultimately I probably spent too much time in the legal system as well. But I kind of got into the world of banking by mistake, I think, in the beginning. A lot of people who went to the school that I went to were applying for a job at Coutts and Company, which is the Queen's Bank in the UK. So I applied, wasn't really too bothered about it, and out of maybe 50 people who applied, I was one of two that were offered a job. So I started working 15 Lombard Street, and kind of grew into it from there. You know, like as you said, it was the Big Bang era, all of that deregulation going on. So, you know, it was, I mean, and you know this because you were there as well. It was a land of opportunity, a huge opportunity. And the more that you were in the industry, the more that you saw that people were changing jobs very often. You might work somewhere for 6 months or 12 months, and somebody else will be looking for somebody else in that type of role, offering a bit more money. So there was huge opportunity at that time. And you know, if whenever I'm asked on to speak at different events or whatever, people often ask what was the changing point for the financial markets, and I think Big Bang was a huge one, because it went from being stockbrokers and a personal liability to make sure that everything was under control, to almost through the Big Bang era and big banks or more big banks coming into the City of London. It changed to other people's money, and be that shareholders of the institutions. And I think that was for me, looking back on it, that was a seminal change in the financial markets.
So within that, and I mean, as I say, you're a working class lad like myself, and London changed massively from being the old school Thai network to being incredibly opportunistic in that era. What was the draw for being a trader? Was it to be the alpha predator in that sector? Tell us about the transition from sort of being in financial services to being on the floor and wanting to be a trader. What was the real driver for that?
Yeah, I think you've got it. I think it was the alpha male type of thing. For me, it was, the thing that really drove me. It wasn't money. I think there's a certain amount of status that runs through everything that I did over my banking career, if you like, albeit quite a short one. So I think status is very prevalent in the city, and getting to where you can do within the opportunities that are there. And for me, there were no limitations, right? So trading was the thing that everybody was drawn to, because it was the number one opportunity within the banks and within the organizations that you work for at the time. The people making the tough decisions on a daily basis, and it was that almost gladiatorial type of but it was, and yourself from working on the floor, some of that's quite physical, but it is that like I'm top of the tree type of mentality, and it draws a certain type of individual towards it.
It causes a few problems too, I suppose, with that personality type of, I'm not going to say ego, because that's probably not the right word, but as someone that's recognition driven, to really want to be at the very, very top of that tree. And one of the interesting things, Nick, I mean, obviously an enormous amount has changed. And when we talk about our clients, in the trading ecosystem that we're in, you think about order placing now on any market globally is literally a couple of clicks on a computer screen and you are live in the market and doing it. And you kind of turn the clock back to the order process back then. Now in London, it would have been, I guess, the client calls the sales broker calls the booth write the order down, the runner takes it out to the pit, the trader fills it, and then reverse the process. Was that something that was quite similar in Singapore at Cymex?
Yeah, I think the other part that you've got of it, which is probably missed out a little bit, is you probably had some salespeople in the office as well who are calling the client to try and interest them in the trade, be that an equity trade, be that some sort of option strategy that you're putting together. So in Japan, predominantly the trading that I did in Singapore was Nikkei 225. So you'd have the two sides of the business, the two sides of the business that should never talk behind those Chinese walls that either did or didn't exist. So you had the sales team who would be talking directly to clients, and then you had the prop traders, the arbitrage traders, or whatever they were, placing orders for the house, if you like, or for the bank. So there were two types of people, and those two types of orders would both come into the trading floor and be executed in the manner that you say. So, I think people look back at it now, and we talk about runners picking up tickets and running them around, and it's just alien when everything is at the click of a finger these days. And
it's crazy. And I guess from that perspective, with so many moving parts in that old process, there's a tremendous risk of errors, which I guess in an open outcry system is an everyday fact of life. So let's talk a bit about the errors account. Let's get to the meat in the sandwich, the 5/8 account. How did that come about? Tell us a bit about the early days with that, and maybe some of the early trades that were booked there.
Yeah, well, it started out just purely as an error account, really. And as you've said, you're in an open outcry market with, maybe 150, 200 people in a Nikkei 225 pit. Everybody, the eye line is, you think your eye line is one particular way, but there might be 2 or 3 people that you could be connecting with. So you do get errors, and there can be price discrepancies, there can be lot discrepancies, there can be people discrepancies. So that was the purpose of the runners, to get those tickets around as quickly as possible, get them into the clearing machines, and then work out if there were any discrepancies. So the error account initially was to resolve those discrepancies, and the ultimate way that you resolve them is, if you couldn't agree daily in the pit would be then to go and report the issue to the exchange and go and view cameras and see exactly what went on. But the basic rule of thumb, and would have been the same on life as well, is that you target matching trades within a 30-minute period.
Yep.
So now everything's instant, and you've got your feel, that there was a 30-minute window where you could, that there could be some sort of negotiation about it as well.
Got it. So a bit of a gentleman's agreement over a beer, and we're all squared away. So
Get a bit of that.
So to that point, Nick, yeah, that's how it started. A couple of maybe errors covering for your team, I think, was one of the stories, which is pretty altruistic. So all of this came about through, covering up for a mistake by one of your team members. Is that right?
Yeah. So we, the Nikkei 225 in Singapore was didn't have great volume. I think when I arrived in Singapore, it was trading 2,000 contracts a day. Wasn't pulling up any trees. So what happened in Japan is a lot of circuit breakers started to kick in when the Nikkei 225 started to plummet and move lower. It was trading around 39,000 when I was first in Singapore. So the circuit breakers were kicking in Japan. All the business shifted to Singapore instantly. Overnight would be kind, but it was really instant. As soon as the Nikkei 225 went limit down for the day, which it did quite regularly, I think it was a 700-point movement at that particular time, all of the business would come into Singapore. So you've got an exchange that's used to doing 2,000 contracts a day, instantly is trading 20,000. Nobody's ready. Nobody's ready. There's not enough people. So you start to, and the way the industry was at the time is you recruit wherever you can. So you look to recruit from other brokers, you look to recruit from other people, the runners that might be on the floor. Then you look at the compliance staff, people who are looking after the trading floor. And eventually there's nobody left, right? So you've got these people who are controlling a very fast moving market who have absolutely zero experience. And, it became a little bit like the Wild West. And with that volume, there was, the number of errors increased quite dramatically. One of the girls who should have been nowhere near the phones picked up a phone, passed an order to one of the order fillers. It was completely the wrong way round. And because there was so much more business going through, rather than matching trades in a 30-minute period, it was taking 12, 13 hours to match the trades, which is just completely wrong. And, the exchange should have just stopped trading for a period of time. But there was nowhere for people to shift their Nikkei 225 exposure. And it was on one of those occasions that we realized there was it was a small position discrepancy, but it was, we were significantly on the wrong side of it.
So what sort of size, 20, 30 grand, like sort of fairly?
I think it was even 10 at that particular time. And, the way that you're supposed to escalate it up the level of command. I went into Simon Jones, who was the head of the operations department in Singapore, and explained it to him. He asked me to refer it to London, which for me was a more scary step. And London wasn't going to be in for another 5 or 6 hours. And I took the chance, stupidly, that the market would get back to those sort of levels during the trading day and nobody would be any the wiser. And, as much as I spoke at the beginning about status and success, I also had a huge fear of failure. I grabbed the opportunity of Singapore with both hands and didn't want to be failing that quickly into the journey, if you like.
Yeah. So you that loss presumably escalated a little bit, and others were added to it. What did you tap out at the first time round with that 5/8 account? What did you sort of get the account up to in terms of losses?
The first time round, I think the loss by May of 1993. So this started sort of around the June 92 period. By May of 93, the loss was up to $20 million. I was selling options to hide the loss. So receiving the premium in, that was bringing the account balance down to zero. And as long as London would supply me with margin, I could do that pretty much for as long as I possibly could to try and resolve the situation.
You cleared that one out and got it zeroed. You traded back and zeroed it out.
Yeah. So May of 93, the loss, the options expired almost perfectly, and I had the opposite problem. I had a profit that I needed to get rid of, which is, as you know, is a lot easier to do. People will welcome that onto their trading, but nobody will take a loss off you, but they'll all take a profit off you.
So how did that feel so being fairly young in your career, being a young man, and it is a brutal Darwinian environment, there's no question about it, and being sent to Singapore to conquer the world for bearings. you had to carry that for a fairly lengthy period of time. What sort of psychological weight was kind of on your shoulders? And then I guess the point I really want to get into, Nick, is when you got that zeroed out and back to a clear or profitable account, how did that feel to you then psychologically, having dodged the bullet and cleared that position out?
Well, look, psychologically, you think you can start your life again. So it's, you know, that there's no better feeling. You've managed to achieve what you were trying to do, which was to just bring that account back down to zero and then start to do things correctly. But the problem is, you know, that the preceding 6-7 months is all about bad behavior and bad process, and
kind of condition, you know, that you can sort of push back against the structure, the process, the compliance regulations.
Yeah, 100%. And even just the people who worked for me. So, you know, I would have had 6 or 7 different order fillers who were working for me on the trading floor. And it was those guys sometimes who were making the errors, you know. One of them, you might ask somebody to buy 200 lots at the market on the open, and then you get the tickets back or the cards back with all of the orders on, you add it up and there's 210.
Yeah.
You know, so they were never admonished, they were never reprimanded. And I suppose they started to get a little bit negligent within their own roles as well. So, you know, option expiry was on a Friday. That's the hallelujah moment when you think, you know, you can start again. But then on Monday morning, the same guys are making the same mistakes and errors are going back into the 5/8 account. So, you know, I don't think I was mature enough from a business perspective to have that, you know, the manager employee role, admonish these people and draw a line under it over that weekend. It was just more of the same on a Monday.
Well, I guess, you know, when you're shoulder to shoulder, literally, you know, in the heat of combat in the pit, you know, there's an enormous camaraderie, which is extraordinarily difficult to explain for people that haven't been in that situation, that bonds people. How would you describe the sort of compliance regime and risk management structures at Barings at that point in time, just out of interest?
I mean, the answer is non-existent.
Right.
You know, Barings was all. I'd worked for Barings at that stage for a couple of years, and I'd lived in Hong Kong and worked in Hong Kong with Barings. I'd lived and worked in Indonesia as well, in Jakarta, and it was always trying to solve problems.
Yeah.
So it was always, Barings was always about doing the business quick before everybody else, and the infrastructure, the controls, the processes would always come along later. And Singapore wasn't quite that sort of episode, but there were so many different episodes of things going wrong because the compliance, the risk management around the type of business that they were doing was just slow. So if you go back
to that era, I mean, you know, derivatives trading in a retail context was a relatively new thing in that time frame in the early 90s. Yeah, you didn't have necessarily retail punters having a crack at it. And with an institution, and I've worked for a fairly blue-blooded firm in my time, the recruitment process there seems to be very different. It's very old school tie and a lot of nepotism as opposed to necessarily stronger skill sets like you saw, for example, with some of the American and European banks. Would that be a fair comment?
Yeah, look, I worked for Morgan Stanley prior to working for Barings, and you know, they're chalk and cheese. You know, like at Barings, more often than not, I think one of the guys who eventually was put in place as one of the senior risk managers was a captain in the army. And I'm not discrediting the army and their roles coming into the business at all, but you know, his experience of risk management or working in the financial services industry was zero. But you know, it was that sort of approach to things. And one of the points you made earlier, just in relation to camaraderie, you know, and looking after people, that was one of my biggest failings. And I think it comes from my working class heritage, where you are very loyal to people. So, you know, like if an order, and this is a genuine story, one of the order fillers who worked for me in Singapore, he was going through a bit of a messy divorce. He came and lived at my house with me and his wife, with me and my wife, you know, so it was just all too close. And there was never really that manager employee type of relationship.
Very, very tough position to be in, and particularly when in your heart and mind you're actually coming from a good place to try and do stuff. So what happened next? How did you become the notorious rogue trader that your reputation carries now? You got the errors account zeroed out, back on the straight and narrow for a period of time, and then where did it go from there?
Well, I think it was only back on the straight and narrow for that weekend, and there was no trading that weekend, to be honest with you. So on Monday morning, the errors would have started again, and it was the same sort of stuff. So again, it starts small, it starts quite low, and then I'm doing a bit of arbitrage trading at that time, looking at some of the rollovers that needed to be done for the arbitrage desk in Tokyo. That's adding to some of the mistakes. I'm legging into and out of those, trying to get the best prices possible, definitely taking on more risk than I was allowed to during that period. But and as much as the focus was trying to get everything back to zero, again, I think what happened was that some of that early success in being able to resolve the situation was exceptionally damaging going forward, because you start to believe that you're going to be able to do it. And I think, when you look at things in the modern era, or, in today's type of environment for traders, one of the worst things for them is a bit of success getting out of a dangerous situation, because
absolutely, that reinforcement of bad behavior and you
yeah,
again. Mm.
Yeah, you think you can do it again, and more often than not, you can't. The market might let you away with something once, rarely lets you away with it twice. It's a very efficient vehicle, and ultimately it ends up costing you.
So, giving us an idea of scale, obviously the Kobe earthquake comes along and smashes literally the Japan and the market. At that point in time, ballpark, what sort of size unauthorized position were you carrying roughly?
Well, look, it was all unauthorized. So, I can only defer to numbers that I see in the book, but the position was huge. I mean, I think the impact of Kobe, Kobe did obviously cause the markets to drop a little bit more, and there were a lot of knockout puts that were around at the time that would put extra pressure on the market as it went through different strike prices. But for me, the position was just too big by then. You look at the market, I was short something like 100,000 options.
Oh, okay. So just for the benefit of people that are less across markets, so a short position or short options, you're basically expecting the market to move higher, not lower, and then the earthquake comes along and puts that argument on its head, and the market drops, which is not what.
I was actually short straddles, so I was short the put and the call.
Yeah.
But because of the significant move, it was skewing it very. One wasn't offsetting the other; it was skewing it massively in the opposite direction. But the problem as well, and probably the bigger problem, was that I was short, I was long something like 60,000 futures contracts as well. So this was this was a huge position, right?
So the face value of a Nikkei future would have been at that time, I'm guessing, what, 150, 160 grand face value times 60,000 contracts?
Something like that, yeah. No, it was a huge position.
That's like over $1 billion in terms of face value. So that's literally, no pun intended, but I guess that size position is big enough to be a problem.
Yeah. I mean, the size of the position, and then you look at the market, how much you can unwind in the market, and you walk into the options pit, and there were 3 or 4 reasonably small option market makers. You ask for a quote, they're going to skew it because they're the other side of the trade, and you look for quantity, and there was 20. And I needed to do 100,000 of them to get out of a position. So you've got there was no liquidity pool to play into.
I guess you were the market.
I did, and I think I was a lot of the market in the futures contract as well. I think I overstate this when I'm talking at dinners, but I was probably something like 35% of the volume on a daily basis, chopping and changing, but not changing the overall picture. I mean, I think one of the things, and again, we could talk about this in a few minutes, once you get yourself into a bad position, I used to think very early on, you might go in and look at your position and work out how you could turn it around. At a point, and it was quite early on, my position was too big to flip. I was long and I had to stay long in the hope that the market was going to recover. And I'm buying into a falling market. And in terms of the knife catching that I was doing during that period, it was extreme.
I think one of the really interesting things to come out of that, so earthquake happens, there's no ability to meet any kind of margin call around that. I think from memory, the options on the Nikkei are cash settled at expiry as well. So you get the coin up front, but you've got to pay the adjustment on expiry. Is that right?
Yeah.
Yeah. So there's a looming wall of pain coming there too. So what happened then?
I ran away. I left Singapore on the 23rd of February, 1995. Not necessarily because the pressure was getting too much. I mean, obviously London was struggling with margin, but up until that point, they were always able to send money over. Capital base
still sending margin to you to manage the position on the basis that this is short term. You're going to be getting it back. It's just to cover client positions or something like that.
Yeah, it's a bit like the Fed and the talk of transitory inflation recently. I don't know how long something can be transitory, and although the Fed obviously think it's longer than me, but short term, I mean, the flow of money was always to me in Singapore. And just to put it into some context, the capital base of Barings at that time was about £250 million. By the end of 1994, I had £600 million with me in financing my illegal position. So more than two or close to 2.5 times capital base of the bank. Legal limit you could lend to a subsidiary was 10% of the bank's capital. So 25 million pounds. So I'm 13, 14 times in breach of that limit. The bank are obviously in breach of that limit. They're reporting that to their regulators as well. So the bank was borrowing money. And they're borrowing it from Barclays, they're borrowing it from Citibank. They eventually say, we're not lending you any more money. They go to the stock market, they issue a bond for £100 million. And this is all to finance what you described as a short-term situation. And, like we would ask for London, we would ask London for money probably 3 days out of 5, maybe 4 days out of 5. It might be 100 million Monday, 50 million Tuesday, another 100 million Wednesday, maybe 25 million on Thursday, and then we'll give them 5 million back on Friday. So it's skewed very much in terms of the flow of funds coming to Singapore. And, it's nonsensical. Like you and I both know, right? If you trade futures and options, it's a cash-rich business. You take more margin from your customer than you pay to the exchange, and you keep the difference on account. So there is no reason for me to have 1 penny in additional margin, yet by the end of 1994, I had £600 million that you really cannot justify. And the reasons that I would give would be completely nonsensical. But I think, it fed into maybe a blue-blooded lack of knowledge or lack of real understanding within the organization, that they didn't want to highlight that they really didn't know what was going on, and it was easier to pay the money across than really get down into the detail and say, no, look, I need to understand this a bit more, or I really don't understand. And I think that's what happened over that period. I mean, nobody ever challenged me. The last, I suppose, nobody did a position check. It was, like if you...
That's unbelievable, because normally it's a twice a day process.
Yeah, at least, and coming from Morgan Stanley, if your positions didn't agree, you didn't trade. It was, it's a simple fact. My positions did not agree for nearly 3 years, but nobody did the reconciliation. And the first time anybody did the reconciliation was the 23rd of February, 1995. So it wasn't a case of, there's no more margin or the market's doing this, that, or the other. It was simply, presented with a very simple position check, because we only had two accounts, right? We had a London account, a Tokyo account. You add the two together, you compare it to the Singapore International Monetary Exchange. There is, as we've just discussed, 100,000's worth of an options discrepancy. There's a 60,000 futures contract discrepancy. And there's no way to answer
it. Again, this is the quantity of contracts. It's not the dollars. It's the quantity of contracts, which is just vast. I mean, it's insane. Something that's really interesting, and I mean, so you mentioned you fled Singapore. You did the bank. You ended up, I think, getting arrested in Frankfurt. Is that right?
I did, yeah. I flew to Kuala Lumpur at first, spent a bit of time in Kota Kinabalu, just really trying to understand. Like, I never expected the bank to collapse, right? I didn't know what the capital base of the bank was. I was just trying to do a job, trying to extract myself from a bad situation. And if I asked for 600 million and they kept giving it, I didn't know what the limit to that was. So obviously I knew that there was going to be a significant loss. Didn't expect it to cause the collapse of the bank. And that's ultimately,
I guess it's like, on any trading floor, if you've revealed your hand and you're in a bit of pain, it's a pretty Darwinian place. So you can expect just about every other trader there to take their fair share of flesh off the carcass. So I'm guessing when you left Singapore for Indonesia and then onto Frankfurt, they didn't get on to, well, not that you could unwind that position of that size, I suppose, but they didn't get on to trying to proactively manage it. They were just like, geez, what have we got here? And sort of frozen.
Yeah, no, I think Goldman Sachs were put in charge of the unwind and they did rather well out of it. I think just looking through the Board of Banking Supervision report into the collapse of the bank, from the point that I fled Singapore until the positions were all resolved, I think there was something like 90 million of a foreign exchange discrepancy. On top of however poorly they unwound the contracts onto their own books.
So arrested in Frankfurt, you had a bit of time there before you were deported to Singapore to face charges and do your time, I guess.
Yeah, no, I was in Germany for about 8.5, 9 months before I went back to Singapore. So out of all of this, a lot of people that would be listening to this would be, he did the wrong thing, got arrested at this time, that's how it should be. One of the things that I'd like to say that personally I'd admire you for is we've talked about the major deficiencies in the compliance and supervision regime at Barings, but I don't think there's anything I've seen, and certainly not through our conversation today, Nick, where you've ever done anything other than own the situation 100%. You haven't tried to lay off onto anyone and go, they should have done this or that. You've owned it from go to woe, so to speak. And even though it's a murky story, I think there's also a significant and recognizable level of integrity that I'd just like to mention in there. Well, look, I thank you for saying that. It's not something I necessarily, promote myself. I think, I spent a lot of time in prison in Singapore, more so than during my time in Germany, and you kind of try to rationalize things, and you need to be fully accountable. You need to accept fully the guilt in order to be able to move on. There's no point, coming up with a load of fake stories about why you did stuff and why certain things happened. And, the blame game is definitely not the approach that I took.
So what do it? I mean, and again, to be really clear for everybody listening to this, financially, there was nothing in it for you. There was no big, I've just managed to scoop off 20 mil to my Swiss bank account kind of thing. So there was no financial gain. What was the driver behind it? I mean, I don't know, ego, trader confidence, or that desire to try and turn it around, recognition. What was the driver, do you think, when you sort of look back and unpack, that sort of 3-year period of your life?
Well, look, I think status has a big part to play within it. I did a book with a psychologist a few years ago, and he really focuses in on the status. For me, it was, the way that I look at it was that I had a huge need for success. But why didn't I put my hand up and say things were going wrong? For me, the reason is I just could not enunciate my own failure. And I didn't, like, if you go back throughout this whole period, and as you described it, it's definitely murky. But like I didn't tell anybody about what was going on, because it highlighted my own failure. And that was the one thing that I really couldn't come to terms with. And so, if you unravel the whole package and the whole rebound or recovery from the situation, you have to highlight those behaviors that got you in so much trouble. So failure, taking a loss, understanding a loss, things like that are things that you have to come to terms with and understand the processes or the behaviors that got you into those difficult situations. So for me, it's all about accountability, responsibility, accepting the blame, because the blame is all mine, right? There's no point me trying to push that out onto other people. What did everybody do an A1 job during that time at Bearings? Absolutely not. But, they can answer their own shortgivings for themselves. It wasn't them that forced me to take every single trade. It was me, So it's quite right that I went to jail for my actions during that period.
Can I ask you something around that? Because, your father's a plasterer, working class boy who, no pun intended, the boy did good kind of thing, got into the city, very heavily recognized job, running the show for Bearings in Asia, the rising star, the big revenue line driver, and so on. I think sometimes that driver, and I'm from a working class background too, and you wonder sometimes the driver you have is to show your family that you amounted to something, or maybe that's not right, maybe that's not the ego thing, but that recognition of giving your family something they can be proud of is, I've found personally, certainly something that's driven me through some tough decision making, not on this scale I might add, but some difficult decision making that you push forward, because that kind of pressure to show that you've made it is a huge thing lurking in the background, and perhaps could cloud your decisions. Is that something that would sort of be a similar story for yourself?
Yeah, I think, for me growing up, it was always about, and we lived on a council estate. It was a very working class background. There wasn't a great deal of money around. We always had everything that we needed and wanted, but it was a struggle to get there. So for me, it was always, my driver would have been achieving more, and this would have been something that was instilled in me by my mother. Achieving a bit more than they had, and that working class idea that you're gonna live a middle class life as you grow up and aspire in that direction. I think as much as that was the focus and what drove me in terms of achieving more within the industry, I think you also have to, basic honesty and integrity are important within that as well. And I kind of lost sight of that. For a period of time, but the real restrictor of owning up to what was going on was not being able to highlight that failure. And I often say that as much as I was postponing the realization of the losses throughout that near 3-year period, I was also postponing the realization of my own failure. So every time I'd roll those options from November to December or January to February, it was another 30 days where I didn't have to say, look, I'm messing up here. And that was
rolling is a terrible game of pass the parcel. It's coming at some point, and I guess you just want to try and push it along the line, as far as you can. And we see clients that get into the roll dance where you can be right or you can be rich. They're not the same thing, and sometimes you just got to cop it early. I guess just like stop losses, you can't have a stop loss on $1 billion position and in a liquid market. So that wasn't something that was available to your position. But with losses, normally the first cut's always the cheapest. Get it done, get it out, and that cathartic release of that bad position is closed. I don't have to do the roll dance anymore. It's all over. I can kind of move forward. It comes as a relief, even though it's painful at the time. Yeah,
100%. It's like the sooner I'd act, like I often say to people, and I think that's why things like this and your own business and education services where people can ask for help and advice. I think, if I look back over that whole period of my time at Bearings in Singapore, I was surrounded by people that could have helped me and could have pointed me in the right direction. And we don't know, nobody knows everything all of the time. And, at 25, I saw asking for help as a sign of weakness. I should have seen it as a sign of trying to do things correctly.
Yeah.
But there are processes, there's structures. I think everybody, like when I worked at Morgan Stanley and when I worked at Barings, probably more significantly, everything was about how we could bypass some of the structure and some of the rules, and that really came home to roost, I think, when you look at the story of Barings.
So if you had your time over again, would you have done things differently?
Yeah, I'd like to think that I had more support. That I was very. I would have said that I was very immature from a business perspective and from a management perspective during that particular time. So, like, I love being challenged, and I think that's what the industry does. It challenges all of the time, but you need that economic and business maturity to be able to deal with difficult situations. So, I think that comes through support, and I think the education, the empowerment you get from some of the people that are there now to give that advice, like stop losses and things like that, and RRR, and whether you believe them or you don't believe them, and everybody will have a different opinion in that regard. There are things that are there within the markets that can keep you safe, and I think acting early, I think, is a key part within that, and I certainly didn't, and for that reason paid the consequences that I did, that ultimately serve a 6.5-year prison sentence in Singapore.
So you trade now. I guess it's one of those things. It's when it's in your blood, it's in your blood. You can't not. I don't know if you have the same challenge. You sort of see the news and you think, okay, join the dots. There's a trade there, and off you go to the screen, kind of thing. So you do a bit in the market now again. Are you a big indicator user, or do you sort of read the price action, sort of a la being on the floor, albeit through the screen?
I try to, and try is the operative word here. I try to make it as close to the trading floor as I can. So, if I look at, and obviously I'm 55 years old these days, so I don't want to be sat in front of a screen for 12 hours trying to work for that, or trying to look for that perfect alignment of various different indicators. So I trade around the opening bell.
Yeah.
And the reason why I do that is, so there's 2 opening bells during my time zone. So you've got the European Open and then the Open in New York. I trade fairly quick and quite frequently around that 1 hour period.
There's a bit of movement there, you're going to get some action, hey?
Yeah, you're guaranteed movement, number one, right? So that's what you need to make money. So I focus in on those periods. You get a fair bit of spoofing pre-bell. I know it's illegal these days, but there's nothing on the screens to suggest that it's that people aren't doing it. And you get a few programs triggering, I think, at the same times of the day. So I try to take advantage of those. It doesn't always work out, but I think it's closer in that 1 hour period pre-market and in the 30 minutes of the market being open. I think it's closer to a pit environment than anything else I've seen. I like to be out of the market fairly quick after 3 o'clock in the afternoon. Yep. UK time. The big American banks take control. I always try to explain to people that when I used to, or when friends used to stand on Life, or when I used to stand in the Singapore International Monetary Exchange pits all those years ago, if JP Morgan or one of the big American players was coming in, you're best to take your bid and offer out of the market, because they're going to move it, right? And their orders are big enough to move the market, and then it'll settle down afterwards, and you can try to trade from that particular point. So I don't trade around numbers. I do a little bit of technical analysis early in the mornings, nothing too spectacular. Try to keep it simple. I mean, if you, I've never tried to do it, but if you count up the number of forms of technical analysis that there are. It probably numbers 50 or 60. It may even be even higher. And I think it's confusing. So, I think you've got to settle on things that work for you.
Well, price is the ultimate thing that works, because that's what you're trading, right? And you can lose it in indicators very, very easily.
But I'm also happy. I'm also happy to be opinionated. So, like I'll make a decision about, like, I have nobody else to blame, right? So if I'm long and I'm wrong, I'm wrong. Right. And if I'm short and I get caught, I get caught. So, and those things are difficult for people to understand. Nobody enters a trade expecting to lose money, but more than 50% of us do. Right. So there's a lot of learning for a lot of people in that regard.
You stop losses now? When do you put them on the entry, or once you've got set and it's kind of moved a little bit?
You don't want the honest answer.
Brutally honest, my friend. Brutally honest. Give it to me now. What do you got?
No, I don't.
Maybe never. Give us what you've got.
No, I don't put them on. I don't put them on immediately, and the reason being is the trades are usually quite short term. I'm looking to take. I trade in a little bit more size than maybe than a number of retail traders would do, but I'm only looking for 20, 25 pips out of the DAX, out of the Dow. If I catch a move, I catch a move. So the stop does go in, but it goes in slightly after the trade. It's more about speed for me.
Gotcha.
And just catching that bit of price action. So, and this is just being honest, if you're, unless you've got it.
That's what we're after. I think you got to give it room to breathe. You can't choke it by you can't pick apples hugging the trunk. You got to get out on the branch, and there's risk associated with that if you want the good fruit.
Yeah, no, agreed. And it is about speed for me around those particular times. I mean, the Dow can be quite forgiving in the first 3 or 4 minutes of trading, unless it's really caught a trend. So you get a bit of two-way price action in that period. So I think you have a bit of time in order to be able to put your stop on. And it is the indices that I trade. I don't trade currencies. I trade a bit of gold from time to time.
Any crypto in there?
No, don't understand it. People have brought me on to talk about crypto on various shows over the years. And, my advice has always been, if you don't understand it, don't touch it, which has borne some fruit over the last 6 months or so as Bitcoin has gone from 69 down. I think it touched 17.5 at the weekend. And it's, the real reason why I never got involved with crypto in the beginning was a technical reason. The spreads were just too wide. You want something that's fairly tight and is liquid. And I don't think Bitcoin for me in the early days was that.
So in terms of advice, then, obviously not in the crypto space, you're trading, you're reading price action, you like dynamic markets. And I think that comment in itself, for traders that are new into markets, finding out your groove, where your mojo is, what you enjoy doing, where you have a skill set and where you can enjoy some success is the place to focus on, and not trying to change who you are and learn a raft of new tricks where you come in at ground level as an amateur again. What advice would you give for someone, an aspiring trader, someone that's new to markets? Give the Nick Leeson 3 to 5 points of these are good takeaways for someone that's starting out in the journey based on what's been an incredibly colorful 30+ year career that you've had.
Well, I think you can summarize it probably down to one, to be honest with you, Andrew. Risk management is the key.
Yep.
If like everybody wants to make money and to make a profit, but you also have to be able to manage a bad position. So as soon as you're in that bad position, where does your stop go? I agree with you. You still want to give it some time to breathe, but there has to be a point at which you're going to activate that stop. Some of us can pull the trigger, some of us can't, and they need that structure of the stop being very rigid within that. Yep. But risk management is the key part. Whether you're in a winning position or a losing position, managing that loss is very, very difficult. And I think sometimes the worst thing that can happen to people is they have a bit of success too soon, maybe get out of that, one of those, get out of a losing position easily, and they start to believe that they can do it again. So processes, structure, being disciplined, and always being very, very conscious that you have tight risk management are probably the keys. And it's tough, right? Like every time I trade after 3 o'clock in the afternoon, I just sit there looking at the losses racking up. So, work out when are the best times of the day for you to trade. And there are so many, there's so many different packages that can give you that information these days. And for me, it's the opening bell. And I think you're guaranteed a movement, which is what everybody's looking for. And don't force trades. Don't think that you've got to be trading just because you sat in front of the screen. I think a lot of trading goes on through some of that boredom that people experience when they're waiting for stuff to happen, and forcing trades into the market.
Yeah, great advice. And trading is like learning to swim. You got to get in the pool, you got to get wet, and you got to take a bit of water in the lungs to see what that feels like. And hopefully you learn that lesson early on. And it's a temporary setback as to something that sees you floating face down, that's for sure. Look, Nick, it's been absolutely fantastic to go down memory lane initially, but just to see where you're at and what you're doing. And I think that lesson of risk management, I mean, I guess it's something that's been a major theme through your career and story through life, both in terms of not using it and obviously then using it. And I think if there's one takeaway point for our clients to make sure that they bolt in and strap it on is to have that risk under control. Just like to thank you. It's been great having you on the show. It's great to see where you're at in life and as I say, to chew the fat about the days of old and what the future has in store. So thank you so much for sharing your time with us.
It's great. Thank you very much for having me.
There you have it, guys. No question about it. That is some story. Make sure you give us a review and a rating so we can help more people get this information, and we'll look forward to hosting you next week.